The surge of electric vehicles and metal prices. Welcome, investors. There's a revolution happening in the transportation and energy sectors that's reshaping markets and creating exciting investment opportunities. That revolution is the rapid adoption of electric vehicles, EVs, and it's not just transforming how we drive, it's electrifying the metals market. Today, we'll uncover how EV growth is driving demand for critical metals, explore opportunities for savvy investors, and discuss how to navigate the risks of this booming trend. Buckle up because this discussion could spark new ideas for your investment strategies. Electric vehicles are no longer the future, they're the present. Over the past decade, we've witnessed EV production skyrocket as manufacturers pivot to clean energy transportation. But why is this happening so quickly? Governments worldwide are pushing hard for a greener future by enforcing strict emissions laws, offering subsidies, and setting ambitious goals to phase out fossil fuel cars. Coupled with consumer demand for eco-friendly options, the EV shift has been monumental. Then there's the staggering progress in battery technology. Advanced lithium-ion batteries have made EVs faster, more efficient, and more affordable. Consumers who once worried about range and reliability are quickly becoming adopters. By 2030, electric vehicles are projected to account for more than half of all new car sales globally. The future is electric, and it's arriving much faster than most expected. What does this mean for us as investors? To answer that, we need to look at a critical component of EVs, their batteries. At the heart of every EV is its battery, an innovation that relies heavily on specific metals to store and deliver power. These metals include lithium, cobalt, and nickel. Let's break them down. Lithium, the superstar of EV batteries. Its unique properties make lithium-ion batteries lightweight, compact, and high-performing. Cobalt improves battery stability and longevity, making it crucial for maintaining performance over years of use. Nickel boosts energy density, allowing EVs to travel farther on a single charge. Simply put, without these metals, EVs wouldn't exist. As a result, the EV boom has triggered skyrocketing demand for these commodities. Mining companies that extract these metals are now under immense pressure to meet global needs, and this demand is rapidly outpacing supply. With this foundation, let's examine the economics of supply and demand and what they mean for metal prices. The surge in EV demand is fueling a metals frenzy. Governments and corporations are setting more ambitious production and sales targets, leading to a direct increase in the need for lithium, cobalt, and nickel. To illustrate, a typical EV battery requires more than 20 pounds of lithium and smaller but crucial amounts of cobalt and nickel. Multiply that by millions of vehicles, and you can see how demand quickly escalates. The challenge? Mining these metals isn't easy. Resources are finite, and extraction often creates bottlenecks in supply chains. For example, lithium mining is geographically concentrated, with countries like Australia and Chile holding significant reserves. Any hiccup in production can ripple through global markets, impacting supplies for battery manufacturers. Beyond resource limitations, ethical and environmental concerns cloud the mining industry. Cobalt extraction, for instance, has been criticized for labor abuses and unsustainable practices. It's clear that while the EV revolution is exciting, sourcing its materials comes with challenges investors need to consider. Let's talk numbers. As demand rises, metal prices inevitably follow. Over the past few years, lithium prices have seen a remarkable surge. Imagine this. In early 2021, lithium carbonate's price hovered around $6,000 per metric ton, but by 2023, it surpassed $70,000 per metric ton in some markets. These are incredible gains for an investor holding lithium-related stocks. Cobalt and nickel have seen similar trajectories. Persistent demand from EV battery manufacturers, coupled with supply chain constraints, has pushed prices higher. While this benefits mining companies, it also introduces market volatility. For investors, this volatility can represent opportunities to buy in during dips and ride out price recoveries. However, it also calls for a balanced approach, as high price fluctuations make investing risky when supply disruptions occur. Now let's answer the big question. How can you as an investor capitalize on this trend? Investing in mining companies that produce lithium, cobalt, and nickel can offer significant upside. Leading players like Albemarle, a lithium company, or Glencore, a major cobalt producer, are positioned to thrive as EV production accelerates. Analyzing their production capacity, geographic footprint, and commitment to sustainable mining can help identify the best opportunities. EV battery innovation is happening at a breakneck pace. Companies that pioneer better, more cost-effective battery technologies are prime candidates for investment. Look for businesses focused on solid-state batteries or researching alternative metals that might replace cobalt, reducing costs and improving efficiency. Sustainability is a growing concern in the metals market, and recycling could be the answer. As EV adoption grows, the volume of used batteries requiring disposal will increase. Companies specializing in battery recycling can recover critical materials like lithium and cobalt from old units, presenting an eco-friendly and lucrative opportunity. For investors who seek diversification, exchange-traded funds, ETFs, offer exposure to the entire EV and metals ecosystem. Options like the Global X Lithium and Battery Tech ETF bundle companies across mining, battery production, and EV manufacturing, offering broad access to this revolution. While investment opportunities abound, it's essential to evaluate the risks before diving in. Metal prices are notoriously volatile, influenced by supply disruptions, economic downturns, and geopolitical developments. A strike at a lithium mine or shifting regulations in cobalt-producing countries can shock the market. Investors must prepare for price swings and avoid overexposure to any single commodity. Mining for critical metals like cobalt has drawn scrutiny for human rights abuses and environmental degradation. These factors may lead to stricter regulations or public backlash, affecting company valuations. Investors should prioritize companies committed to ethical and sustainable practices. What if lithium, cobalt, or nickel become harder to source? Or if scientists develop alternatives to these metals? For instance, sodium-ion batteries are a potential replacement that could reduce reliance on scarce lithium. Such breakthroughs might disrupt the current market, so investors need to stay ahead of technological advancements. To navigate this dynamic market, consider these strategies. Diversify your portfolio. Spread investments across mining stocks, battery tech, and green ETFs to mitigate individual risks. Monitor market trends and policies. Stay informed about government regulations, EV adoption rates, and advances in battery technology. These factors directly influence demand and company growth. Take a long-term perspective. While metal prices may fluctuate in the short term, the EV revolution is a multi-decade trend. Invest with patience and foresight. Research sustainability practices. Companies that embrace sustainability have fewer regulatory risks and greater long-term market appeal. Ensure your picks meet these standards. So what does the future look like for EVs and metals? We're just scratching the surface. By 2035, the global shift toward EVs is expected to reduce fossil fuel car production significantly, further increasing dependence on lithium-ion batteries. At the same time, industries unrelated to EVs, such as renewable energy storage, are adopting similar technologies and driving metal demand even higher. However, innovation will likely reshape the landscape. Emerging technologies like solid-state batteries and potentially recyclable battery designs may lessen reliance on scarce materials such as cobalt. These breakthroughs could stabilize metal markets and support the EV revolution sustainably. For savvy investors, staying ahead of these trends is key. Balancing optimism about the EV future with a clear-eyed view of risks will ensure you make informed and profitable decisions. The surge of electric vehicles is ushering in a new era of transportation and energy. At its center are the critical metals powering this shift, creating unprecedented opportunities for investors. From mining companies and battery technology firms to recycling businesses and ETFs, options abound for those looking to ride this electric wave. But remember, opportunities come with challenges. Ethical concerns, market volatility, and technological disruptions are risks investors must navigate. By staying informed, diversifying portfolios, and taking a long-term view, you can make the most of this exciting investment trend. So, are you ready to charge into the future of electric vehicles and metals? Let your investment decisions turn this green revolution into sustainable returns. Stay ahead of the curve, and happy investing.